The Rajesh Exports stock has corrected by almost 50%. It has fallen to 514 rupees from its February high of 946. Back in June, the company was accused of not releasing a comparison of cash flow figures in its audit report. Whenever a stock corrects by 50%, it is either an undervalued opportunity or a value trap. To find out the reality, we need to look into the financial statements and understand the business model. In this video, I will be sharing relevant information about Rajesh Exports, which will help retail investors form an opinion about the company. And be sure to subscribe so that you don't miss future videos on fundamental analysis and investing. Namaste and welcome to Retail Investing. So Rajesh Exports is in the business of manufacturing gold and gold products. They are engaged in refining of gold, manufacturing of gold products and their exports. The company has businesses in the entire value chain of gold, starting from refining and ending at retailing. They have 80 jewelry showrooms in Karnataka. They process 35% of the gold produced in the entire world. Their research and development facilities at Bangalore, and they have refineries at Uttarakhand and Switzerland. The market capitalization is roughly 15,000 crore rupees, and it's trading at a price to earnings multiple of 10.8 against the industry PE of 28.8. It has a debt of 724 crore rupees, but its reserves are much higher at 14,694 crores. Its return on capital employed and return on equity are both around 10%. Both the quick and current ratios show adequate liquidity levels. Its 5-year free cash flows are largely negative, and the PEG ratio suggests it's still highly overvalued even after 50% correction. The income statement looks quite funny to me. The company has sales of 3,75,881 crore rupees, and its expenses are more than 99% of its sales. As you can see, it's showing the operating profit margin is 0%. Its net profit of 1470 crore rupees is just 0.39% of its revenues. Great businesses have one thing in common. Once a break-even point is achieved, with increase in sales, the operating profit margins increase even more. Let's say there is a company which has annual sales of 100 crore rupees and the operating profit is 10 crore rupees, which is a 10% operating profit margin. And suppose next year the company increases its sales to 200 crore rupees and its operating profits increase to 30 crore rupees. This means that in 1 year the sales increased by 100%, but the operating profits increased by 200%. That is the concept of operating leverage. And for Rajesh Exports, the operating profit margin is 0 even at sales of 3,75,000 crore rupees. That should give you an idea of the business economics of Rajesh Exports. When it comes to shareholding pattern, promoters hold 54% stake in the company and they have not sold anything. That's a good sign. The most interesting part that I notice is that Life Insurance Corporation of India, that is LIC, holds an 11% stake. It's not that easy to make LIC invest in your company. I think this is a positive thing, but the negatives far outweigh the positives. I could not find any con calls after 2019. If the management is not regularly interacting with its shareholders, it raises questions on their accountability. The management's sole purpose is to create value for the company's shareholders, and they are not even interacting with the shareholders. Another thing that I found out on Screener is that the amount of taxes paid by the company seems to be lower than what it should be. The corporate taxes that a company pays are calculated as a percentage of its profits. If the tax figures are lower than what they should be, that is an indication that the profit figures are also lower. It basically means that the company may have reported inaccurate earnings. Now there is supposedly a positive news about the company regarding it getting a tender for production of lithium-ion batteries. Under the Production Linked Incentive Scheme, in short PLI, the Ministry of Heavy Industries issued tenders of 18,000 crore rupees for production of advanced batteries. In the initial round, Rajesh Exports qualified for production of 5 gigawatt-hour lithium-ion cells. After that, they did not submit any detailed plans to the government and they are going to be disqualified from the project. It looks intentional. So first, the company creates news that they got a big contract for manufacturing batteries and the share price goes up. and then they don't submit any real plans to the government how they are going to manufacture the batteries. And when this news comes out, the stock price crashes. Aap chronology samjhiye. It looks like everything was pre-planned. Here is another very interesting news from 2013 concerning the company. The managing director was accused in a gold smuggling case from a special economic zone in Kochi. A non-bailable arrest warrant was issued against him. Definitely not a good sign. I found an earnings forecast report that's claiming that the company's earnings are expected to go up 81% by March 2024 and 138% by March 2025. If that happens, the stock price should also go up 81% by March 2024, considering the price to earnings multiple remains the same. I did not find that earnings forecast report at all credible, mainly because of the company's past performance. Successful investing is all about finding the difference between price and value. A stock or a business does not become undervalued just because the price corrected by 50% and the P ratio became half. Price of a stock is set by panicked buyers and sellers on a daily basis. Value is decided by revenues, profit margins, cash flows and assets. This company has no profit margins even at sales of 3,75,000 crores. How can it have any value if its future cash flows are totally doubtful? Titan Industries is also in the business of gold jewelry, and that company makes profits of 4,300 crore rupees at sales of 43,000 crore rupees at a return on capital employed of 25%. That's what a real business looks like. I don't care what kind of chart pattern Rajesh Exports is forming or what the candlesticks are suggesting. It doesn't matter whether it is a hammer, a doji, or a bullish harami candlestick, because none of that can change the fundamentals of a company. You see, wealth is not created by trading. It's created by sitting and doing nothing, but after you invest in great businesses. And by the way, these are not my words. So the question is, can the stock reach its previous high and generate a 100% return? I remember a stock from 2021 named Tata Teleservices Maharashtra Limited, in short TTML. The stock went up 10x for no reason. There were no improvements in revenues or profits, but still the stock went up 10 times. And in the end, TTML destroyed the wealth of retail investors. This always happens with stocks which move up and down based only on news and rumors. Speculators can take stocks like these to any levels. An intelligent investor should know when to take action and when to sit back and relax. Now, please don't think that this video was a buy, sell or not buy recommendation of any kind. It was only for the education of retail investors. If you got something valuable from this video, please like, subscribe and share. And don't forget to type in the comment section whether you are bullish or bearish on the stock. Thank you very much for watching the video, and I'll see you in the next one. Jai Hind.